Hi, everyone, and welcome to this week's Markets to Watch from Smack the Markets for the week commencing the 15th of July 2019. So, this week we start out with quite a light news schedule. We've only two items on today's schedule, but as the week goes on, we do get a lot more stuff. And tomorrow, for example, we have a very heavy day. We have a lot of stuff out of the UK, the US, and even the Eurozone. So, quite a bit of stuff to keep the markets interested there. In the background, it's still the same stuff. It's the China-US trade war going on, and that's still very much to the front. But even more so to the front at the moment is the Iranian situation and the tensions in the Gulf. So last week we saw that there was a new threat on an oil tanker from the UK, and in response to that, they've sent out a second Navy ship over there. But the most recent headline on that is that the Iranian president is willing to go into talks with the US if sanctions are lifted and if they return to the 2015 nuclear deal. So that's the situation there. In the other side of the Atlantic, we still have that contest, with the premiership contest heating up between the two candidates, and we will have a conclusion to that next week, and we'll know who the new Prime Minister of the UK is at that point. So if we look at the markets, and starting with a forex market, we have here the US dollar versus the Swissy. So we'll come to the weekly chart first here, and you can see that this is in a downtrend now. It's last week we had a nice, very strong bearish candle. It's broken the low of that already today. It's broken that level as well there around about that area. And, we'll be targeting here that it's very close to 97 level there, the lows here. So quite a big window on this one. This is also supported by the continuous weakness in the dollar that we were seeing today. And also the Swissy has been very strong towards the end of last week and today again. Coming down further onto the daily, we can see here what's happening here. So this was in an uptrend. That uptrend was broken now today with that new low being pushed in. And we're looking like for hitting that 98 level first, and then 97 will be the secondary target after that. So coming down further to the 4-hour chart, we can see these trends are beginning to, moving averages are beginning to get into formation, and the trends are intact. Nice sideways candles there, small candles, they're broken now, and that consolidation is broken to the downside. So this is all looking very nice for a move down to test that 98 level. If we open up the 60-minute chart here, you can see the significance of that level that it broke there just this morning, and we're below that now, and that's close enough to that 98 level there that we'd be targeting. And we have some pivots on the way down there that may come into play as well later on. So that's our forex market. The US indices are having a great run. They are breaking new highs every single day, brand new all-time highs. So even if we look here on the weekly chart, first of all, it's heading up. It's 27,347 right now. Where is it going? There's no data up there, so it has to be a big round number. We have to assume it's going for. So 27,500 is the next area. The 500s are very significant in this chart. 25,500 is there. You can see that even if you go back here to the 20 or the 18,500, quite a significant level as well, and also the 1,000. So we're targeting 27,500 first of all on this one. Now, if that doesn't, transpire, it is overextended on the daily. Even you can see they're quite overextended on the daily, and even on the 4-hour chart. If we come down a little bit lower, you can see that we have a divergent high here on the indicators on the RSI and the 2-hour chart. The indicators on the 60-minute chart are flattening out now, so that trend is kind of waning a little bit, and a retracement would be good for this market. Now, if this does retrace, where is it likely to come back to? The 27,000 is the obvious area, but that's quite a deep retracement on this one at the moment for such a strong market. So if we draw a fib from the low to the high there, you can see that there's another area in there around the 27,100 area, something like that. So if it did pull back there, that's the point where we'd be looking to get long again, and getting long positions targeting again that 27,500 area. Our favorite commodity this week and last week actually is the oil, and this one again, it's the weekly now is kind of in just about in an uptrend, but the daily is in an uptrend now at this stage. Last week we were looking at this point here, we were hoping to get long above this area and targeting $60 mark. Now we did manage to get long, and we did hit several targets on the way up to that, but at this point now it's above $60. We had a little bit of not a lack of movement on Thursday and Friday last week. We have two pretty small candles. It was stuck in about an 80-point range for something that usually moves at the moment, about 164 points. So that's a little bit of indecision there, but at the same time, it's just pulled back into this area here on the 8-hour chart. And if we look at it here, you can see that it's producing a nice little bullish candle in this one. If we can just get this closed first. So there it is. So we have that bullish candle being produced now there in that zone. So again, we'll be targeting the $62 mark on this. So quite a bit of room on this one, all the way up to 62. And if we don't manage to get an entry here, we'll get it somewhere else, hopefully. So that's just about it for the moment. We'll be back on Wednesday to review these markets and see how they progressed on at that stage. So we hope it helps, and we'll speak to you then.